Overtrading. Overtrading is a term in financial statement analysis. Overtrading often occurs when companies expand their own operations too quickly, aggressively. Finance Wales, A Practical Guide to Cash Flow Management, page 28. SEMA, 2004 https://web.archive.org/web/201112402102/http://www.hypeak.gov.uk/business/econdeff/general/cash_flow_management_funded_17_0408_ref Overtraded companies enter a negative cycle, where an increase in interest expenses negatively impacts the net profit, which leads to lesser working capital, and that leads to increased borrowings, which in turn leads to interest expenses, and the cycle continues. Overtraded companies eventually face liquidity problems and/or run out of working capital. Conditions.